All right, so we are, it is our free preview week, so we're going to do something a little bit different today. We've got a couple of you in the room that are not used to being in the room. Some of you may be catching us up on, maybe some of you watching us on YouTube, which is super cool as well. So hoping to have some interaction today. One of the things about the room, for those of you that are not familiar, we really appreciate and want a tremendous amount of interaction. The more you use the chat box, the more you ask questions, the more you talk back and forth, the much better this session will be. So please feel free to do that and to get engaged throughout the session. So this is a futures session. So the reason that we do this session is because we want to set up our week. Essentially, we want to really set up our week, and this is a free preview week. For a lot of you that are not used to the way we do things here at Traders Army, we're big believers that your week starts on Sunday night, and you start your week on Sunday evening, and it's really how do we get going Sunday evening to prepare us for the upcoming rest of the trading week. And so we're going to go through our major markets, our major equities markets. We're going to go through our some of our energies and metals markets. We'll take a look at ags. We'll take a look at currencies and bonds. Really to kind of round out what we're looking at for the week. So hopefully you guys are ready to as they say, cocked, locked, and ready to rock. So let's go ahead and get going. All right. So looking very quickly at our overall major markets, I want to start with our major markets because I always start with the major markets. And we're looking at our major market comparison. Now, what we're looking at now is a one-year comparison of the S&P, the NASDAQ, the Dow Jones, and the Russell. So over the past 1 year, the Russell's down 16.5%, the NASDAQ's down 14.8%, S&P down 13.2%, Dow's down 7.7%. Well, the full year doesn't really help me much, right? The full year doesn't really do a lot for me. So what I want to do is I want to take it and look at the last 20 days. And I like to look at the last 20 days because it's a picture of basically the last trading month, right? I'm essentially looking at the last trading month. And what do we notice? Well, the Russell is absolutely getting its butt kicked. And the Russell's absolutely getting its butt kicked down 9.28%. But remember the exposure that the Russell has to some regional banks that the rest of the indexes don't have quite as much regional bank exposure. And so knowing that, it's not overly shocking that the Russell is down the most. What's interesting to me is that we are completely being buoyed by the tech, right? Tech is completely keeping the market up at 5.26% rally in the last 20 days. It is definitely the strongest one that we have. And so as I look to see where are we going, and I look at a major market comparison, the NASDAQ's our leader in the clubhouse, followed by the S&P, followed by the Dow, and then the Russell is coming in last. Let's just look at last week. And the last 5 trading days. So over the last 5 trading days, we saw much of the same. The Russell's, the NASDAQ's number 1, S&P's number 2, Dow's number 3, Russell is number 4. Now, we would normally look at the Russell to be a leader, and I think that there is a potentiality that the Russell does rally back up hard from this, because remember, it's got those higher beta stocks that are in it. But for now, we're still going to look at the NASDAQ as our major market leader. So looking at our equities markets, starting first with our 4-hour chart. And we use our 4-hour chart as my big picture trend identifier, right? My 4-hour chart, which is my big picture trend identifier. So what is my current 4-hour trend on the S&P? Up, down, or sideways? Well, when I look at that, it is not giving me a phenomenal picture. What is the YouTube address? Here we go. I just put it in the chat. It's not giving me a phenomenal picture right now as far as the direction that we are moving, right? Yeah, you're right. The majority of stocks of the NASDAQ aren't doing so great. I would agree with that, Rich. I would say that the trend of this is down, but we are coming up with a bit of an upswing. I would agree with that, Liz, wholeheartedly. Now, why? Because remember, my trend is really only based off of the last and most recent swing highs and swing lows. And if I look at my most recent, I'm going to get rid of some of these lines that I have on here just to clean it up a bit. If I look at my most recent swing highs and swing lows, I can very clearly see that I have a swing high, swing high, swing high. I've got 3 consecutive lower swing highs. Swing low, swing low, swing low, sweet chariot. I have 3 consecutive lower swing lows. Now, this is a big move up on this most recent, and so there definitely is a bit of an upswing on our most recent momentum. But overall, I'm still in a downward trend overall on the S&P. When I take that over and I do the same thing on the NASDAQ on a 4-hour chart, what is my trend direction? Well, on a NASDAQ in my 4-hour chart, if I look at just swing highs and swing lows, I'm actually fairly sideways, right? I'm fairly sideways right now. And when I say that I'm sideways, what I'm really looking at here is I've got my most recent swing high, swing low, swing high, swing low, swing high, swing low. I'm pinching a little bit, right? So, well, Liz, I guess I wouldn't consider that a swing high. That's a great point. It's not a swing high as of yet. It's not going to be a swing high until price comes back down. So you're right. It would not be considered a swing high on that S&P. So that is a very good point. On that ES, that current price is not a swing high, but we have rallied up pretty strong. And if let's say that does become the swing high, then it would just be a lower high. So you're right, it's not a swing high as of yet. But where I'm looking at the NASDAQ, we're kind of pinching a bit sideways. So what does that give me from a price direction? Well, it tells me I'm probably more interested right now in looking at quality selling opportunities, right? But I don't know that I'm going to have some great quality selling opportunities above current price. I might actually have to consider some of these buying levels that are below me. So if I want to look for quality selling opportunities, number one is I'm going to identify current price. All right, and after we identify current price, we look up and to the left to the origin of a strong drop in price. So here's our current price. We're going to look up and to the left, and I've got certainly a level here, which was a very strong move down, but we're currently in that level now and not getting a strong reaction out of it, right? So not getting a super strong reaction out of it makes me feel a little bit less likely to want to do much to this. And then I could come all the way over here to look at this upper wick, but this upper wick is also not going to be a great supply level. So now when I say, well, I've got some selling opportunities because my trend is down, but I don't have any really great levels to lean on, right, below that area. John, that's a great point, right? 3, 4 a.m. is when the story starts. I sometimes think that the best times of day for me to look at levels are right around that London Open, right? Levels formed at that London Open are usually beautiful levels. So what about demand levels below me, right? And if I want to look for areas where we may see a potential turning point below me, and I'm going to actually come down to this area right here. I'm going to zoom in on it. This wick over wick level that we have identified right here. Now we call this a wick over wick because I've got equal sized wick up with a wick down overlapping. The wick overlaps the next candle's body. This wick overlaps the previous candle's body, right? And the other thing I specifically like about this is that it's in a bit of a fair price value area. And when I say a fair price value area, what I mean is that if you notice, the market has hit this price level on a number of occasions, right? It's hit this level on a number of occasions. So with that happening, that means that we would have a decent little area to be a buyer if price gives us a drop back into this region. That actually may be a pretty good level. Now, the downside of that level is that you're kind of counter trend in that position, right? If our 4-hour is down, this would be a counter trend position. So by definition, I cannot take this as a limit entry, and a limit entry meaning I get in as soon as price touches this upper level. Remember that when I'm identifying these zones, I can have two. I can really have three entry types, but I really focus on two of those entry types. And it would be a limit entry, which means I'm essentially getting long as price comes here and immediately getting long as soon as it touches that level. And so you're hoping for a bounce. Well, I'm not really confident enough in this level to do that because this is a counter trend trade. So what I do is I want to switch that to what's called a confirmation entry. And a confirmation entry for me would be, I'm going to change this to a little bit of a dashed line. And it would, John, that would be the start of a change. Well, it wouldn't officially be a change in trend direction, John, because in order to be a change in trend direction, that would give me a higher swing low, but I would not yet have a higher swing high. I don't have a change in trend direction until I have both a higher swing low and a higher swing high. So I can get a higher swing low, but if I don't get a higher swing high, then it's not going to change my trend direction. But it definitely will give me that higher low. And so as I look at this level, this 4,000 level, 39.95, a little bit below there, you know, we've hit that number. It's not surprising, by the way, that we've hit that 4,000 mark on a number of occasions and reversed off that area. But a confirmation entry would mean I'm willing to get in, but I'm only going to get in if price trades down into this level, and then we buy as it comes up out of the level. So essentially, the way that you do that is that you have an activation rule that activates your trade at this price, right? It turns it on and it says, all right, well, I'm really that's going to activate the trade, but I'm only going to get in if we trade, if we come into this level. And really, I say activates it when it gets here. I really want to activate it in here, and then it's a stop limit entry as we come out of the level right here. And then if we come down into this level and we keep cutting through, you cancel the order below this region here. Okay? So in a confirmation trade, all I want to do is I want to see it start making my move. So that if price does something like this where we come down into it and then we just chop and then we drop away, now I've never gotten into that trade. So no harm, no foul. If price, do a different color here real quick. Let's use purple. If price comes down into the level and it does something like this, right? Now I'm into the trade here because it activated. Let me use one more color. Now, let's say that it's, we're going to use green. Let's say price comes into the level like this and we just, boom, pop right off of there and we rock it straight up. Do I make money on that trade? No, you missed that trade. And that's the downside of confirmation entries. For a confirmation entry, it's got to trade halfway into the level in order to activate that position. Okay? Let's look at that on a 15-minute. I hadn't done any refining time frame, Liz, but that does make some sense. Oh, you're right. So Liz points out a great thing here on the 15-minute chart that the level is probably this area here, right? Drop base, very nice move away. This is the bit of the retest, right? So this is a bit of a retest of the level. So when we cut down to a 15-minute chart, it's a less attractive zone. So when we score this thing, the highest, because that would be a reason that we may not want to take it. The highest it could score is a 10, but it's going to score. It'll lose 2 points for being counter trend. It'll lose another point if that level is not what we would consider a fresh level because it's already been touched. So now I'm down to a 7 out of 10. That's confirmation. Even one thing makes that a less likely scenario. So good point on that one, Liz. All right. I'm going to keep it marked because I think it's still a pretty good level. But it may not be as effective of a trade, and it might be worth entering on a 15-minute time period just to minimize your exposure. As far as supply goes, if I look up above me, I mean, we had a couple of good supply levels that have already been tested, right? This area here, and then this area way up here where it's marked off in the blue. Those have already been tested, and prices moved through those levels. And so since we've tested them and moved through those levels, you got to go higher. I don't really have great supply again until we get up here, and my guess is that's on a 15-minute chart. Yeah, that's a little level on a 15 minutes. Let me change the color on that. All right. Yeah, I'd agree with that, Liz. Liz types in the chat box for those of you that didn't see about the all indices currently trading above Friday's high. High odds the price will bounce off Friday's pit session unless the London boys want to take the market lower in the overnight. I think there's a good chance that we will bounce off of one of these levels down here.
Pit session high is what I meant to say.
Yeah, I figured that's what it was.
Yeah.
Boy sessions. We are. I'm enjoying a 14-year Balvenie Caribbean cask tonight. If anybody else is interested, this is a smooth drinking Scotch. That's my drink of choice for the evening. All right. So if I move over to the NQ, what's up, Mr. Senior? So the NASDAQ. We've got some confirmation, or like some higher wicks in the last couple of daily charts, telling us the market keeps trying to go higher and it's unable to do so. Keep trying to go higher, not able to do so. But it's kind of grinding a bit higher, right? We're grinding a bit higher over the last couple of days. And so when I look at the NASDAQ, where am I looking to take advantage of a position? Well, I got to tell you, I'm not in love with anything inside of this. I mean, this is not the best of times. It's not the worst of times. I mean, you've got a little wick over wick area here on the hourly chart. It's very similar to the S&P one, right? Where we've already come back in and re-wicked into that level. So, you know, it's definitely a weaker opportunity because of this long lower wick. I think there's a good chance that we drive into there. Well, you know, a little war, a little peace, John, never hurt anybody. Oh, wait, actually, maybe it did. So I like the area. I like the picture on a 60-minute chart. What I don't like is that 15-minute movement that we saw. Now, coming all the way down to here, we definitely already got a bit of a bounce off of this level. Still valid because we didn't trade more than 50% into the zone. Just has to be a confirmation entry because it's already been touched once, right? Anytime that we lower the probability because we've already touched it once, we then have to change it. So, all right. Looking at demand around 12,416, Glenn says. Yeah, Glenn, you talking about this area right down in here? Yeah, we've already got that level marked off as a potential area of demand, and I think that does make for a good demand area because it's a fair price value area as well. And for those of you not familiar with fair price value areas, we really look to see what in the past acted as a turning point where the market has really found some balance. And I think that's a really good level. It's just a little far away from current price. And so while I agree with you, I do like the level. I've got two levels in between it that we've got to get through in order to get to that one. Now, the level I actually like a bit better is this one right here, this 12,613 by 12,594, where we have a little rally, a little bit of a base, and then a pretty nice move away. This little bit of basing that we see in here between 12,613 and 12,594, that's kind of my favorite picture. A little bit of a pivot, right? A pivot low with a rally base rally after the pivot. And that pivot low that we're given here means that a lot of people caused it to start to go up, but there were more that jumped on the train, and that train, you hear the train a coming, it's rolling around the bend, and I ain't seen the sunshine, and I don't know when. And so we're still waiting on price to come back into that level. That's just another one that's pretty darn far away. If I look at, where we might turn on a smaller time frame here, you could theoretically look into this area here. I mean, there's just not a lot of great turning point levels aside from what we saw, this wick over wick on the hourly chart. But even this wick over wick on the hourly chart, because it's already been tested on the 15-minute, has to be taken with the proverbial grain of salt. Okay? Questions on the NASDAQ. What other questions or thoughts do y'all have specifically relating to the NASDAQ? Now, as far as supply goes, by the way, looking above us for areas of supply and selling opportunities. Yeah, for sure there will be, Rich, no doubt. We're going to have, we'll have multiple days of trading between now and then to look at that and to prep for that. But as I look, at the hourly chart, I go back on the 90-day chart. I don't have anything on here, so I got to go back further. Put this out here, extend this to the left. So looking above that price point, here we go. So we've got above that current price point. Now we're going back to August for supply levels. Do I, by the way, think that there's a whole bunch of orders that are sitting on the books for the March NASDAQ futures contract back in August? No, I don't think there are. But if there's enough people that are looking at the same area and the same level, and the market tends to have a lot of people doing a lot of the same things, that's where you wind up getting your levels, right? I mean, nobody was trading the June contract for 2023 back in August of 2022. But are there enough people that are still interested in this level here? Now, you've got really two levels on the hourly chart worth your salt, if you will. Both of them in here. I've got a lower level at 13,237, and then an upper level at 13,356. I don't like the lower level, and let me tell you why. First of all, it's got a gap, yes, but that gap was almost closed once, closed a second time. I feel like it's a bit too obvious. And so I'm going to remove that level at this point. Don't like it as much. I do like this upper level, but that's 13,356. That's pretty dang far away from where we are today. That's our next closest area of high quality supply above this 13,100 where we've wicked up into. Now, if we go back to that 13,100, there was coming all the way back to here. This little bit of a supply area. And I say little bit, it's actually a pretty strong supply area because we got a parabolic move away from that level, thus making that level that much stronger. We've come really, really close to it, didn't quite get in, moved away. Come close to it again, didn't quite get in. And so I find that to be a very cautionary tale. When there's levels that we just kind of keep tickling up along it without getting into it, I find it to be a very cautionary tale and a level I don't want to play with. All right. Moving on. So I'm going to remove that level. I'm going to leave my lower demand right here at 12,864 by 12,831. I'm going to leave this upper supply at 13,356 by 13,433, remembering that my stop goes on the other side of either one of those levels. All right, next would be the Russell 2000. Domi Amogato, Disco Russell Bato. Clearly, what's my trend direction? Right, it's clearly a downtrend, which tells me that I'd be more likely to be a seller, right? Would clearly be more likely to be a seller in this instance. But as I look at this from a selling perspective, I don't have a lot of great opportunities here, right? looking up and to the left, let me remove some of these demand areas. Looking up and to the left, that's not a great supply. Neither is any of this. I mean, this is a lot of noise kind of moving along through here. Lots and lots of noise. So with all that noise, now what do? Well, and I do agree, Liz, with if it can find some legs, there's definitely room. Oops, turn my camera off. There's definitely room for that thing to rally up harder if we can find some legs, because there's no real supply to stop it, right? There's no strong supply that's going to say, hey, you know what? Let's just put let's hit the brakes on this thing. Let's put a hard stop on it so it can't go any further. And that just doesn't exist. So knowing that I don't have that hard supply, there's room to go up. And once again, on the Russell, just like the other two markets, you have that pesky whittle wabbit, that pesky wick over wick sitting right here, where it's basically the same level in all three of our indices going back to Friday, right? Yes, it's consistent noise, John. Kind of like my children at times. I mean that with all the love in the world. Yeah, it's consistent noise, but there's definitely some noise around this level. And so since it shows up on all three of the markets, it's definitely one worth paying close attention to. Now, if we rally from here, right, if we are able to rally from here, and you start to head up, looking at our supply up above us. Remember, we look up and to the left to the origin of a strong drop in price. As I look up and to the left, we're sitting right underneath the tweezer top, right? That tweezer top was a nice little catalyst for price to move lower on Thursday. We then have this big area right here that we came this big upper wick, and certainly this was on our FOMC announcement. Yeah, I was just about to do that, Liz. And so none of this supply is very pretty, and this has the same picture as the NASDAQ and the S&P, where we rallied out of it, and then our 15-minute came back down into it. So the level loses a score for freshness, right? It's not quite like three-day-old fish, but it's a bit like gas station sushi, right? You guys know what I mean when I say gas station sushi? Like, you can go, but it's not going to be the freshest, and you are taking a bit of a risk, right? Gas station sushi, it's not the freshest, and you're taking a bit of a risk, but it might turn out okay, right? That's kind of the part of the way that I like to look at that. And then when we move over to the Dow, I'm positive we're going to get the exact same picture. In Kansas, yes, nothing but the freshest of Pacific seafood in Kansas. I'm positive we're going to get the same picture when I look at the Dow, right? There's their same wick over wick. I move to my same 15-minute time period, and bada bing, it's a level that's already been touched, and so that makes it that much weaker. I do like the level, though. Oh, I don't think it's all bad in Kansas, Rich. I think Kansas has a lot of good things. I just don't know that the sushi is what people are going to Kansas for. Corn, barbecue, Rock'em Sock'em Jayhawks. Hell, the Kansas City Chiefs, I know they're in Missouri, but still. But I'm not so sure they're going for sushi. Steaks? Yes, John, I would agree with steaks. I have to say, I've been to just about every state in the union, and I think Kansas is the only one of the only ones I've never been there. Trying to think, I don't know. I've not really done the Kansas, Iowa, North, South Dakota area, so I'm going to need to. There you go, John. Yeah, pick up a quick trip. I've done Kansas City, Missouri, but I don't think I've done the Kansas City, Kansas side. So, all right, nice. All right, so I just don't see a whole lot from an equity standpoint today. I'm not sure if anybody else has that has that thought, but I just don't see a whole lot from an equity standpoint. Let me share this grid now. For those of you that are unfamiliar, one of the things we do in every live trading room, we actually share a copy of our grid so that everybody can have it. I'm going to type it. I'm going to put it into the chat box. We also have our trade updates page that can be found on the website at TradersArmy. We actually put them also on the trade updates page. Now, if you're a Thinkorswim client, makes it super easy, barely an inconvenience. All you got to do is go click on it, then you can open it up right inside the platform. Even if you're not a Thinkorswim client, though, you can at least get the picture, and then you can go back to your platform and draw your lines in very similar places. So we don't give you the grids as far as numbers. I know a lot of people like to get a grid with the supply levels above current price, the demand levels below current price, and they like the numerical grid. We just actually give you the chart. So, all right. Next would be our energies and metals. So looking at energies and metals, let's go to our crude oil. We had a really nice trade off of crude oil last week, hitting off this area of demand, getting a pretty nice rally out of that zone. But we've traded to the very bottom of that zone. So what does that level become? It becomes DTM, more commonly known as dead to me. So we have to remove that level from future trading consideration. This level, we traded more than halfway into the level, so it also becomes DTM, as in dead to me. Both levels were very effective, but unfortunately, both of them are now dead. Now, what about the level that we are sitting below right now? Well, we based in front of the level. And so a different acronym, whereas DTM is dead to me, KOD is the kiss of death. And basing in front of the level is the kiss of death. And so I hate to see basing in front of a level. We based in front of the level. We gapped into it at the open today, and we're not really doing a whole heck of a lot since gapping into it. So that being said, this level, if you already got into it, feel free to stay in it if you want to. I would say that it's probably not the best of areas to waste your capital on, your buying power on. And when I look at this on a 4-hour, what's my trend? Well, meh, right? I mean, this was a clear downward trend through here, but then we got a higher swing high and a slightly higher low, right? So if I'm just looking at swing highs and swing lows, and let me throw my zigzag indicator on here, right? And this zigzag at 0.5% might be a little bit too sensitive. Let me change this to 1. All right, that's probably slightly better, little less sensitive, and it, the indicator is going to change every 1% turn, and so I like this just to kind of determine swing highs and swing lows, and really not to determine them, but to define them. Right? It takes my subjectivity out of, was that really a swing high? Was that really a swing low? I'll let the zigzag do it. I do still have to adjust the percentage based upon the asset class. So for equities, I use 0.5%. I think for commodities, 1% works a bit better, and so. Either way, crude oil, we certainly have higher swing lows through here. So we went from strong downtrend to our first higher low and higher high. So I have a higher swing low and I have a higher swing high. Could I be in a bit of an upward trend? Well, that's the beginning of an upward trend, but I need 2 consecutive would be clearly the strongest way to do it. But I do have a higher swing high and a higher swing low. So if I wanted to be a buyer, where might I be a buyer? I think your first best place to look at being a buyer is above here. Why do I like here? Well, it was demand, right? Support, broken, resistance, based in front of it, got a strong move away. But you may say, well, Chuck, that looks to me like an area of supply where we would anticipate price reversing and coming back down. And I would say, yes, I agree with you. That would be something I would look at the first time we came near that area. But the fact that we came close to it and didn't get in tells me that there's a good chance that we're going to base right in front of this area. And basing in front of that area would be exactly what I want, because that would set up for a breakout above 72.48. Those breakout trades do become kind of the better setups and the better opportunities if we get basing immediately in front of the level. Basing immediately in front of the level would be the ideal scenario for us to get in and let price rally up to the next area of supply. Now, the next area of supply is this 15-minute level here. It's pretty weak. And I say that it's pretty weak primarily because we've rallied up, got a little move away, but that was a retest of this area here to the left. And so I think you're much better off looking to, and I'm going to remove that one. I'm going to make it the full hourly level. This area up here. So I don't think you've got clean air from 72.48 up to 75.58, but I think you certainly have not overly tough sledding. Now, what about making it up to 72.48 on a much smaller time frame, like a 15-minute chart? I'd be interested to see if we base here, right? Remember that we've already got the KOD basing before this level. If we base right in front of this area, you could have a move up for price to continue to run. I've got a little bit of supply here, but it's not amazing, and I don't think enough to stop us if we move up from there. All right. Questions on crude oil? What do y'all think? That's what I think makes the most sense right now is a breakout above one of those two levels. We've bounced off the rest demand level. Very good. I would agree with that. Theoretically, you could look down here for a breakdown below this 66.86. But I like the level of a breakout. I don't like reversals at this point because we're too close to the beginning of a new trend. Reversals at the very beginning of a new trend are the ones that, like John says, they're sticky. All right. Next, gold member. Looking at gold. All right. So as I look at this, this looks to be forming Batman's cowl. Now, what in the world is Batman's cowl? Well, I love when I see wicks up here poking like this. And it's another way to just kind of think of a double top. But I like the fact that there's wicks that cause price rejection. And a wick causing price rejection tells me that we really did try to get up into that area, but the sellers just beat it right back down. And by the sellers beating it right back down, we would now look and say, well, what's our next area of demand that can stop price? Well, let's look, shall we? What's our next area of demand that can stop price? Well, I've got this little level down here formed at a time of day, right? Late afternoon is not the best time of day. Not terrible, not great. We've got this level here, which was sideways. We based in front of it. We got a little bounce off of it. Now, yeah, this is gone. This is garbage at this point. And this level here, right? We got a little move away. We retested it. We moved away again. No, you're out. 1952 is a legit level, right? There is definitely some legitimacy to this level here. And if this level fails, you've got two opportunities for breakdowns, one below 1936 and one below 1967. If we get below 1936, now remember that 1936 is a retest of this prior ascending triangle, which I know we looked at this ascending triangle in the past and we got the bit of the breakout from here. It's a retest of that ascending triangle. And if that ascending triangle is unable to hold, basing in front, where's my demand to stop it? Well, this area here is not, it's pretty good demand formed at the London Open, but it's a retest of this area here to the left. And so I think you come all the way down to here. So for gold, the 4-hour chart is still up. That's the hard part is I'm looking at these breakdowns. But my 4-hour chart still says, hey, dummy, why aren't you being a buyer? You should probably look to be a buyer. The problem is I don't really have anything that's telling me to be a buyer, right? None of my levels are confirming that. My levels are simply telling me, where's my quality demand where I would want to step in and be a buyer? Anybody? Bueller. I just don't see it. Right? I just don't see the area where I would want to step in and be a buyer of gold in any of these levels. Nothing's clean. Now down here, this damn clean level is a good level. I like this level all the way down here. I just don't know that I'd want to be a buyer before that. Okay. Next would be natural gas. The gas du natural. So what is my current predominant trend direction? Somebody tell me that first. What is my current trend direction? Current trend direction is down. What direction did we gap in the overnight? We gapped down. And what is, did we gap outside the prior day's range? Yes, we did. So gapping in the direction of the predominant trend, in the direction of the prior day's, outside of the prior day's range, that is a recipe for a potential gap and go trade scenario. So in the gap and go trade scenario, our entrance is to get short below the first candle's low, which frankly, we're sitting just above that right now, with our stop just above the first candle's high. Okay, now what is our target? Well, I want to be able to make at least 2 times what you put into the position. So that would be a 1-to-1 reward to risk. And this right here would represent a 2-to-1 reward to risk. And so you're looking at a price target conservatively of about 2055. Now, can it run further? You bet your assets it can. You just have to move your stop to break even, take a little money off the table, and then as my 3-year-old daughter, or my 2-year-old daughter now says, let go, let go. Just let it go. Don't hold it back anymore. Just let it run. Take your stop, move it to break even, allow price to run if you want to at that point. Maybe take a little off the table so you put a little money in your pocket. Put a little cheddar in your pocket and then let it run. By the way, now that she can sing the Let It Go song, it's one of the cutest things I've ever seen. All right. So looking at copper. So I'm going to get rid of all these lines for just a second. And we may bring some of them back. When I look at copper, my eyes immediately go here. Because before I learned anything about support, resistance, supply, demand, I learned about trend channels and looking for wholesale and retail prices inside of trend channels, right? Prices go from retail to wholesale, wholesale to retail, wholesale to retail, wholesale to retail, and then back down to wholesale. So we're sitting at a wholesale price point. What's the downside of this current wholesale price point? Well, the downside is that we've chopped sideways in this wholesale price point, whereas every other time we've hit it, we've come up within 4 candles or so. Right here was 4 or 5 candles. This was 2 candles. This was 3 candles. This is a lot of candles, right? So this is, prices are at wholesale, but can we find somebody to unload the inventory? Don't know. And so if I don't know that if I can unload my inventory at my wholesale price, then I've got to lower the price in order to attract more people to buy my inventory at a lower price. In this case, our inventory is copper, right? So if we get below here, that can be a perilous move down. And I say the word if because I don't know that it's going to, right? There's a strong possibility we continue to trade straight up from this level. And if we do trade straight up from this level, then you could look potentially for a breakout above here. And now we're just playing the range. We're playing a breakout above one range or the other, with the opposite one being the stop. All right, questions on these energies and metals markets? I'm going to zoom in on this a little bit before I share the grid so that when everybody gets it, they can see their charts very clearly. Yeah, the dollar's certainly going to have a lot to say for this. Put this in the chat box. And then also put it in the trade feed. All right. Next, let's go to our bonds and currencies, but I'm going to start with our dollar. So our US dollar index, as this thing continues to show weakness and we see price falling off a bit more, where's our next stopping point in the dollar? Well, we're clearly going to get below 100, I think would be kind of the first no-brainer. From there, I think this line down here makes the most sense. Right there, about 97. Now, that's pretty far away from current price, but just know what is the impact it's going to have on every other market, right? Let me throw this on here real quick. We'll show extended hours, not highlight them. Okay. Now I've got essentially a 24-hour trading market. Yeah, I mean, this was a nice breakdown opportunity right below here, a little bit of basing, strong move away, but certainly we're not trading that breakdown because that's right before an FOMC meeting. Well, and I think there's a chance it will, Rich. I think there's a chance that it will. So let's see what that'll do on our bonds and currencies. If that dollar goes down, I think there's definitely some room for some other things to rally. In our 10-year note, we've come back to this little area of demand. We have since hit it and hit it again and hit it again. So 6-candle rule would tell you, even if you've not been stopped out, get out of Dodge on this one. Nothing good can come of this. Matter of fact, it looks to me like it's going to come the other way. Come on. Activate drawing. Grab this. And now we move it down. It's not that hard. Okay. Breakdown below here, I think, is actually the most likely scenario. In this 10-year note is a breakdown below this 115.280 with price trading down to 115.85. Yeah, and that's not a super big move, but there's definitely some opportunity in that little move. Yes, bonds are shaken, not stood. All right. That joke was neat. That joke was neat. See what I did there? Come on, Liz, that was a good one. No? Not a fan of that joke? I could tell a dirty joke, but I'm all out of vermouth. All right. So this was a strong rally away. We came and got a really nice retest more than halfway into the level, thus making it DTM in the future. And so that's dead to me going forward. So I would now look for a breakout above 133. Yeah, above 133, a bit of a breakout. There is some supply up here on the daily chart, but I would look, pay attention more to the hourly if I'm day trading. All right, now the euro. So looking here at our euro. Man, if that dollar sinks and the euro rallies, there is definitely room for this thing to go up if that dollar sinks. we can rally up. Now, that being said, we've had a really strong move down on our 4-hour chart here recently. So I need to remove ish one and this one. I'm going to leave this one on. I really like this one. This is a really good level. This little bit of sideways price action before a very strong drop in price. Anytime I get those very strong drops in price, they do interest me. And not because I'm looking for things on sale. It's because I'm looking for imbalances of areas where buyers and sellers show their cards a little bit, right? And so I've got two of them here. I've got this wick over wick right there, which really I like this one even a bit better because it's a bit sneakier of a level. This is the most obvious that everyone will see. This is a bit more of a sneaky level, and I like this one a lot. If we base in front of either of these levels, they're all dead to me. Because if the dollar drops, then we would anticipate seeing the euro get some more rally and momentum. This looks to be kind of the line in the sand drop off point. Price would have to hit here, get some basing, and then drop below there. All right. And then the Canadian dollar. What does this look like to you? Hashtag why bother, right? This is not a tradable market. Don't trade this stuff. This doesn't make sense to trade. So we're going to say what what the police officer in South Park used to say. It's okay, people. Move along. Nothing to see here. I'm going to share this grid. Put it in the chat. Because that Canadian dollar just didn't even make sense to look at. And I don't know that the rest of my currencies are going to make a heck of a lot more sense to look at. And so, but we will give them a shot. I know there's some of you that probably only trade currencies, right? And so you may say, well, but I don't trade currency futures. And I would say to you, why? Oh, thanks, John. Yeah, we will look at that 8 and 20 right before we wrap up. So the New Zealand dollar, we are sitting right on a rising trend line. And if we get that rising trend line, let's pay attention to that supply area right here. While I agree that the rising trend line does look good and it's very promising, although I guess we based down here for a little while. Came, went. So we got a little bit of basing here. This supply area up here is just too nice for me to ignore. As is the breakdown below this area here. Now, the thing I like about this is that it's a fair price value area. Look over here to the left, right? Lots of this. Yes, Liz does love Canadian iron condors. Yes, almost as much as she likes them on the Japanese yen and gold. At the same time. Great British Pound just rallied up into a supply level. It's I think this is worth a little entry if you want to take it. I think this little 15-minute zone's a good little 15-minute level. We've already hit it and started to get a move away. If you want to take this short, I think you've actually got the ability to take the short now. And I would say move your stop here, just right there. You don't need the whole zone. Just move your stop above here because we are retesting that zone. You use the most recent pivot high as your stop so that you minimize your risk and exposure. And if it doesn't start making your move within 5 or 6 candles, get the heck out of here. I think that's a really nice day trade that's setting up at this exact moment. Isn't that an 80s song? This one's called At This Moment. At This Moment. Come on, who knows the band? Billy Vera and the Beaters. It was one of my favorite songs as a kid growing up. All right. 123 12298 12307. Oh, come on. I like that song. That was a good song, Liz. At least I liked it. All right. Japanese
that
yen.
comment wasn't about the song. That comment was about my love of iron condors or lack
Oh,
thereof.
I mean, I genuinely thought that maybe you were an aviary fan and you enjoyed going to birdwatch and specifically condors. I thought that was what it was. California
Gotcha.
condors. All of them. All right. I can tell you what, all of these currencies look like they've got potential moves down, which is funny because the dollar would have to then rally up, right? And then this, I only like the supply level that exists up above us here, where we have this rally base, very strong move away. I think that's the best level. All right, so those are our currencies, and then we'll go over that 8 and 20 real quick before we wrap it up. Let me share this grid. All right, put this in the chat. Does Canadian Goose really taste like chicken? Yeah, I agree, Rich. There are some somewhat ominous signs out there around bonds, and really the borrowing in general. So just keep that in mind for everybody. All right, so real quick on the SPX, let me pull up the SPX. One of my favorite indicators is to use the 8 and 20 investing moving average. And so we are sitting just at the 8. We've not yet closed above. So if this week we close above the 8, I'm okay if you want to try to get back in utilizing this 8 and 20 system. If we stay below the 8, which that would still tell us that we're staying out. But if we close above the 8, it's okay to get back in and give this another shot. The last time we closed above the 8 was here. We then closed back down below the 20 here. With that big red candle, it turned into a bit of a small loss position overall. But using that 8 and 20, especially when these 8 and 20 are so close to current price, if the market stays sideways, that can chop you up just a little bit, but it doesn't chop you up all that much. And the reason for that is because, if you're buying stocks or ETFs or mutual funds, you ain't paying commissions. So who gives a crap if you get in and out a few times in a month? Right? I don't know. I'm not. But we're sitting right below an opportunity to get back in. Now, why do I do that? Because I'm hoping to catch this next run. What I don't want to do is to be late and on the next run get in here. Well, that doesn't do anybody a damn bit of good. I want to get in all the way down here when we first cross back up above the 8 and you close up above the 8. Okay. Yeah, it's a little. You could, and Greg, it is a little indecisive as well. You could just sit on your hands for a little bit if you want to. My only fear with sitting on your hands too long is this son of a bitch goes up without you, and then you're like, now what do I do? And you've missed it, right? And you've missed it. And so I would much rather get in and then get out if I'm wrong than take the risk of missing a gigantic move. Now, what if it goes the other way? What you could do is you could get in with something like an SPX position and then hedge it with options on the inverse ETFs. So that's really what I'll talk about on Tuesday morning. So for the live trade room Tuesday morning, that will be the plan that I will cover. Okay? So real quick, I'm going to go and show you all. By the way, this is the free preview week. So those of you that are here this week that are not normally with us, thank you for coming. And I mean that. I really do. Your calendar, if you want to come to the sessions this week, this is our member calendar. So the calendar that we have for this week, you have 2 trading rooms tomorrow. You've got a futures trading room at 9 a.m. Eastern and an options room with Corey Lane at 11 a.m. Eastern. Strategic Trader at 8 a.m. Eastern on Tuesday. That's the one that I'm delivering. And then Wednesday is Futures and Wealth Essentials, so longer term investing style. And then Stocks and Options again on Thursday, Futures on Friday, and then we will do this again on Monday night of next week. So hopefully you learned some things, you enjoyed some things tonight. I appreciate you much, and I will talk to you all. I'll talk to you all on Tuesday morning. So until then, if you guys have any questions, shoot us an email. I will talk to you soon. Peace.